Hi, this is Raleigh White with Investing Target, and in this short video, Daniel Sinnig will share how he can find an edge and improve your trading confidence in any market condition. Daniel has 20 plus years of trading experience and is a former consultant for Morgan Stanley. His background is in software engineering, mathematics, and finance, and he specializes in writing custom indicators, expert advisors, and strategy testing software for trading indicators.
Thanks, Raleigh. This was a terrific introduction. My name is Daniel, and in this lecture, I will teach you how everyone can find an edge in the market. For this purpose, we have designed a set of intelligent indicators which will work on the trending, fading, and sideways market. All of our indicators will give you clear entry and exit signals. But on top of that, our indicators will also show you how they are performing for a given symbol and time frame. And this is invaluable information for every trader because it lets you focus on the most probable trades when the odds are stacked and stay away when the probabilities are against you. So let's get started. At tradingindicators.com, our mission is to build innovative tools which are truly useful for you, the traders. We want to empower all of our users to become better traders. We specialize in technical analysis. We are all quants at heart. And when we design our intelligent indicators, we typically focus on hard facts rather than vague ideas. Our indicators work for all major platforms, such as TradingView, Thinkorswim, TradeStation, and many others. When it comes to trading, we firmly believe that there is no one-size-fits-all solution. Market conditions change, and so must your trading approach. A trending market will eventually come to an end and reverse or fall into a sideways consolidation. But what is important is that you recognize this and change your trading style accordingly. A successful trader learns to trade with the market and with the current market condition and does not go against it. And in this lecture, I will show you how to adjust your trading strategy based on the current market conditions. Let's start with the trending market. In the trending market, price action moves in one direction for a prolonged period of time. And price action is typically bound by what we call a sloping channel. In such a sloping channel, as shown here, price will approach an upper end, then typically rebound and bounce off a lower side of the channel. The slope of the channel represents the trend, and the greater the slope, the stronger the trend. Now, how can we trade a trending market? Well, it is fairly easy. The trend is your friend in this case, and you will go and trade in the direction of the trend. What is important, however, is to recognize that within a trending market, we frequently encounter retracements, and you must take this into account. And these retracements can be fairly deep. So to minimize your risk in trading, you want to wait until price approaches in an uptrend the lower end of the channel, enter then in the direction of the trend, in this case long. This will minimize your risk. And typically, you will place your stop loss right below the lower end of the channel. Now, every trending market will eventually come to an end by losing momentum and potentially reverse. Now, as I mentioned before, the trend is your friend, and spotting reversals is inherently difficult, and oftentimes you might be wrong. But there are strong warning signs which you can take advantage of, such as the break of a trendline channel or divergence. Now let's have a look. We have the same chart here. We have an uptrend which eventually will come to an end here. And in this case, this is denoted by the break, the lower break of the trend line channel. Now, when you want to trade in a counter trend fashion, it is important to use a tight stop loss. As I mentioned before, spotting reversals is inherently difficult, and you might be more often wrong than right. So it is important to use a very narrow stop loss because when you're wrong, you want to minimize your risk. The upside of going against the trend is that you will get in at a very advantageous price. And if you're right, you might be up for a big winner, which hopefully will make up for all the small losers that you may have encountered along the way. Now let's contrast trend trading and counter trend trading. This slide here shows the same price action on the top and the lower half. It is in the exact same symbol. What we can see on the upper half is a classic trend entry. Why is this a classic trend entry? Well, there are various signs. First of all, the previous high has been taken out. We make higher lows and higher highs, and momentum is increasing. So here we have our classic trend entry, which happens when the trend has been clearly established. At the lower half, we see a classic counter trend entry. Counter trend entries happen much earlier in the process. You can see this here, and they occur at initial warnings that the predominant trend, which is the uptrend here, has come to an end and might reverse. The upshot is that if you are right for a counter trend entry, you're in for a much better price. Contrast the entry price here, which is around 68, with the entry price up here, which is around 82. This is a huge difference. This is why counter trend entry can be very profitable if done correctly. Now, of course, there's one more market condition that we need to discuss, which is the sideways market. In fact, the sideways markets happens or occurs most of the time. Some statistics say that 70% of the time, the market will be in a sideways consolidation. In such a sideways market, price action is typically bound by horizontal levels of resistance and support, and volume is typically low. Now, how can we trade the sideways market? Well, there are various ways. One approach is to use a scalping technique to go short as price approaches resistance and go long as price approaches support. And you will continue this on and on until eventually the market will break out. A second approach to trade the sideways market is indeed to wait for the breakout out of the sideways consolidation. This is shown here. As we can see here, price will eventually break out of a sideways consolidation, and then we enter in the direction of a breakout. If this breakout is accompanied by abnormally high volatility, the probabilities are stacked that price will continue in the direction of the breakout. Now, we strongly believe that there is a right indicator for each market condition. So the trending market requires a type of indicator, the reversing market requires a different indicator, and so does the sideways market. Now, the $1 million question becomes, how can we tell which market condition we are currently in? This is actually a very hard question, and most traders do not know how to identify the market condition. Oftentimes, the examples or the market is not as clear-cut as in the examples I have shown before. So the question becomes, how can we tell which market condition we are currently trading in? Well, this is actually a very hard question, and most traders do not know how to do this. The problem is that oftentimes the market is not as clear-cut as in the examples I have shown before. Identifying the right market condition and the correct market condition is, however, crucial in successful trading, because indicators do not work well when applied to the wrong market. And if you use the wrong market, if you use the wrong indicator for the wrong market condition, well, you will not get any good signals. We have spent the better part of the last 5 years to find a solution to this problem. In our indicators, we have built in logic to tell you as a trader to indicate how well the indicator is working in the current market condition. And as I said before, this is really invaluable information to you because it allows you to trade when the odds are stacked and to stay away from a signal when the probabilities are against us. So we call this technology market sense. And really it shows you how well the indicator is working for the current market. Now, all our indicators, they not only give you clear-cut buy and sell signals, they will also tell you when to exit out of a trade. Our indicators work for every market condition, the trending market, the reversing market, and the sideways market. And on top of all this, our indicators estimate their win rate. And we call this the market sense technology. Now, enough theory, why don't we just look at some charts? So let me go over to my NinjaTrader platform. And before I continue, I'd like to point out that I'm just using NinjaTrader as an example platform here. Our indicators work on many different platforms, such as TradingView, Thinkorswim, Motive Wave, and many others. On this chart here, which is the S&P E-mini daily chart, we see the 1, 2, 3 strike indicator applied. 1, 2, 3 strike is our trend trading indicator. We can see buy entries identified by these green triangles. and sell entries are identified by red triangles. These little white triangles here in the opposite direction, they denote partial trade exits. As mentioned before, all our indicators will tell you when to get in, but also when to book partial profits or when to get out of the trade. Now, the beauty about this indicator is that it not only shows you these signals, but it will also estimate its performance. This is shown here in the statistics box. As we can see here, we have a long efficiency of 85% and a short efficiency of 40%. So what does that mean? Well, it means that historically speaking, within our look back period, 85% of the long trades have been working out with this indicator and for this symbol, but only 40% of the short trades have been working out. So what can you do as a trader with this information? Well, first of all, it will tell you that the S&P E-mini futures have a strong upside bias, which is not very surprising as the market has been trending up for a very long time. So you can take this statistic to your advantage to perhaps only trade in the long direction. Why is that? Well, because the odds are stacked and higher to go long and be successful than going short. And this is clearly shown here in these statistics. Now let's have a look at a different chart. In fact, it is the same symbol, the S&P E-mini futures, but this time we have the 1 minute time frame. And in this case, we have applied our divergence cloud indicator. Again, short entries are denoted by the red triangle and long entries are denoted by the green triangle. And the little triangles here denote exits. Again, we have our statistics being shown in this box here. And we can see that on the long side, this indicator is working at a 67% efficiency. And to the short side, it is at 65.69%. What I should also mention is that divergence cloud is our counter trend indicator. It's designed to spot reversals in the market. We can see this by this entry here, which spots a reversal to the short side very early on. Now, these statistics here will tell you how well the indicator is working for this time frame. And what you can also do is you can expand the section here, which will give you access to the settings of the indicator. Now, observe when I change the settings, how the performance is updating in real time. Everything is updating in real time, and this gives you a very powerful technique to find the best settings for your indicator. Now let's have a look at one more chart. In this case, it is Apple on the 15-minute chart, and here we have applied our volatility crusher indicator. Volatility crusher is designed to trade breakouts. As we can see here, we have upward facing triangles to denote buy entries along the way. These lines, the purple lines, are profit targets, and the salmon line down here is our stop loss. So a volatility crusher, we're betting on the case that when a breakout occurs, price will continue in the direction of the breakout for quite some time. And you can see this nicely here. And we have built in logic to combine various factors together to make sure that the entries are high probability, which is denoted here as well in our statistics. The long efficiency for volatility crusher for Apple on the 50-minute chart is at 66.67%, whereas the short efficiency is even higher at 88.89%. And again, as we change parameters, you can see the statistics updating immediately. To give you feedback, what is the effect of this parameter change? Now let's go back to the slides. So to sum up, with our indicators, trading becomes actually very simple. All you need to do is this. Step number 1, open up the price chart. Step number 2, apply one of our indicators. Step number 3, make sure these statistics are favorable. If they are not, try to use a different indicator for the symbol or a different symbol altogether. Step number 4, wait for a buy or sell signal and then execute the trade. And step number 5, while you're in the trade, look out for an exit signal. If you remember, all of our indicators, they come with exits as well. And as you see an exit signal, you can manage your trade or potentially close out the trade. We have combined our 3 indicators, which is 1, 2, 3 strike for trend following, divergence cloud for reversal trading, and volatility crusher for breakout trading into one comprehensive bundle. We call this the Power Bundle 360. It allows you to trade all market conditions. And of course, every indicator in this Power Bundle will come with the win rate estimation at a glance, which will empower you as a trader to focus on the most probable trades and stay away from trades where the odds are not in your favor. And we call this the market sense technology. Are there any questions?
Well, thank you, Daniel. That was a terrific presentation, and I really appreciate the time you took to take us step by step through how you use your market sense indicators to spot and then trade a trending, reversal, and sideways market condition. And along these lines, I have a couple of questions I'd like to ask you. Do your indicators work on all asset classes and timeframes?
Yes, indeed they do. Our indicators work for equities, futures, FX, crypto, and even indices. So whatever your favorite asset class is, the statistics will allow you to make informed trading decisions regardless of the market.
Wow, that's terrific. And as a follow-up question to that, do you have a specific process that you follow to find market opportunities?
Yes, so as mentioned in my slides, there's actually a very simple process which makes trading really simple. Open up the chart, apply our indicators, make sure the statistics are in your favor. If not, move on to the next symbol. If they are in your favor, wait for a buy or sell signal, execute the trade, and then while in a trade, look out for an exit signal to manage the trade or close it out.
Wow, that's great. And I guess my last question is this, and it might seem like a simple one, but I need to pose it anyway. And that is, so in your opinion, what are the advantages of using statistics?
Yeah, I think there are multiple really key advantages. Number one, these stats will allow you to figure out whether you should use the indicator or not, and whether you should follow the signals of the indicator or not. Reason number two, these statistics will allow you to hone in your settings for the indicator, because you will get instant feedback of how well the settings change has worked out or has not worked out. And reason number three, these stats will prevent you from taking low probability trades, because you only want to trade when the odds are in your favor. And sometimes you just want to stay away. And staying away sometimes is the best trading advice that you can get.
I couldn't agree with you more. I think that's a fantastic summary. And thanks you once again for that great presentation and for answering my questions. So how can people learn more about you and the services that you offer?
Yes, Raleigh. So indeed, we have created a special offer for you traders, which comprises our 1-2-3 strike trend trading indicator. It has the divergence cloud counter trend indicator, the volatility crusher indicator to find breakouts. And all three indicators come with our revolutionary instant efficiency technology. I know that's a mouthful, but basically what this means is it comes with the win rate estimation statistics, which allow you as a trader to make a more informed decision about your trade. So we have bundled up all this into a package which we offer to you at the price of $797. That's $350 less than the retail value of our individual indicators. So if you want to take advantage of this offer, simply go to tradingindicators.com/360. tradingindicators.com/360. On that page, you will find plenty of additional information about all our products, about how they work, for which platforms they are available, and so on. So I encourage you to check them out.